Shares of Petco are sinking today after the company's fourth quarter earnings raised some concerns for investors. Petco CEO Ron Coughlin joins us now alongside Yahoo Finance's Brian Sozzi. Ron, thank you so much for being here. Obviously, we've got the shares trading down today. I mean, what's the message you want to sort of put out to investors in the face of these numbers?
Hi, Julie. Great to see you, and Brian and Brad. So if you look at our earnings, we beat on the top line from a revenue standpoint. We beat our EBITDA line. And we had terrific cash performance, so good that we paid down an incremental $35 million of debt last week, and we committed to an incremental $100 million as we go into 2023. If you look at it from a customer standpoint, we added over 1 million customers in 2022, which was great, and we hit a milestone of 500,000 on Vital Care. So overall, I just want to say thanks to the team for delivering a solid quarter.
Ron, I came across a Evercore report that did a preview of your earnings before they hit, and they said at the top, pet parents are making tough choices on what to buy when they go into the store because of the current macroeconomic environment. What tough choices do you see them making when they come in?
Yeah, so let me actually challenge the assertion and then reinforce it. So first, within our portfolio, we continue to premiumize to more premium products. So our fresh frozen products are growing double digits. Our Taste of the Wild or Origin in a Can of products that are $100 bags, we continue to grow double digits. So actually within our portfolio, we continue to premiumize. There are lower spending customers that are looking for more value. And for those types of customers, we have some great loyalty programs like Vital Care, which saves them $400 in a year. So you have a bifurcation in the consumer, if you will.
Okay, and so even within that bifurcation in the consumer is clearly, yes, I mean, you got to feed your pet at the end of the day, but do they buy into some of the other products? Have you been seeing continued weakness in that? And or on the other side, where you've invested in the services and veterinary services specifically, where have you seen more of kind of buying into this plan that you've been able to roll out, specifically targeting some of the PALS members, knowing that they are more frequent purchaser for the company?
Yeah, great question, Brad. Thank you. So if you look at our consumables, they're growing double digit. You look at our services growing double digit. We now have almost 250 veterinary hospitals from only 10 in 2018. So we are more and more becoming a services business, to your question. In terms of Vital Care, we got to 500,000 customers. Those customers are spending 3.6 times more than an average customer. And importantly, they're margin accretive from a dollar standpoint to our business. So those are positive trends. I do want to go back to, you look at in these types of economies, you want to look for categories that are growth categories. The pet category has been a growth category. Time immemorial is a growth category in the last 2 recessions, and it's growing through these economic times as well. And we had a comp of 5%. Within this type of economic environment, a comp of 5% is a good number.
Ron, we are, I think a lot of folks can agree, in some form of banking crisis. It's been a challenging 2 weeks for the financial services industry. Is this the moment where you're huddled up with your CFO, thinking about your balance sheet, how much debt you have on your balance sheet, how many stores you have open, and how are you thinking about just protecting your business moving forward?
Yeah, so let me break that into 2 pieces. First, from a banking standpoint, the vast majority of our deposits are with the large national players, top-tier players, and we have no exposure to any of the banks that have been discussed over the last few days. Secondly, that's why we're so thrilled that our cash flow was strong, because we paid down an incremental 35 last week, and we committed to 100 because we are seeing such positive cash flow trends. We also put a collar on our debt to cap the impact from any future interest rate hikes. So we've really insulated ourselves from that. We're focused on operating the business, and delivering a 5% comp, I think, is good operating the business.
I guess I would ask if you're making any changes operationally, right? Are you changing the mix of products that you're putting out there to adjust as people are buying fewer discretionary items, for example? Are you cutting back on staff at all? Are you cutting back on CapEx plans at all? Any kind of changes you're making with the view of some of this changing spending patterns that you're seeing?
Yeah, we got smarter about some of the capital expenditures. Last year, we put 1,000 coolers in, so we already did that. We had some IT debt, so we were able to take some of those capital dollars and reinvest them against our debt as well as against our veterinary network investments. We are supplementing our what I call the OPP, opening price point, for more value-conscious customers. And then we're really driving customers towards Vital Care, where they can save $400 a year through free exams, grooming, and training discounts. But in turn, we get a greater share of wallet. So 30% of those Vital Care customers are new to food with us, 40% are new to services with us, which is a good thing for our business. So the customer wins and we win.
Ron, always great to get an update and get some time with you. Petco CEO Ron Coughlin alongside Yahoo Finance's Brian Sozzi. Thanks so much.
Thank you.